Hello friends. Today I'll be demonstrating the intercompany process flow along with some of the essential configurations required for this implementation. I will guide you through key setup steps and best practices that can aid you in your future implementations on your future projects basically. And let's deep dive into the session. So the first step is these are the steps which I've listed down actually. So the prerequisites for any intercompany is you should have a job role assigned to your user account, which is intercompany account. And second prerequisite is the exchange rate. So if you are transferring from one legal entity to another legal entity, and if they differ in their currencies, then you have to maintain this exchange rate. Okay. The first step is enabling the descriptive flex fields, DFF basically. Now DFF is mainly to capture the additional information. So when you are creating the outbound transactions or inbound transactions, you are just you're capturing the additional information, and that's going to be required. So it is not mandatory, but if your requirement is to capture the additional information, you have to enable these descriptive flex fields, and I'll quickly show you on the screen how it looks like. Come to the setup and maintenance. Manage intercompany descriptive flex field. And you'll find this over here. There are quite few descriptive flex fields assigned against intercompany process or a module. So there's intercompany organizations, transactions. Now if you just expand a little bit here, you will find intercompany transaction type, headers. Okay. So I'm just going to take an example of this one. Transaction. Okay. So this is where exactly you can capture additional information. You can extend this one, you can have a global data elements, you can have a context-based segments, and once you have created those segments, you can deploy the flex field, and that's going to be visible actually at the time of making the transactions. Okay. So this is the first step which we have to do it if it is required, right? Coming back to the second step. Now, second step is very, very important because that's the first step I would say for any intercompany setup. And this is done at the enterprise level. Come to intercompany setup, system options. Right. Now, you can see like the first field tells you whether you want the batch numbering to be done automatically or manually capturing the batch number. There's another one, intercompany currency, that's not required. Basically, that's not mandatory. Minimum transaction amount you can set. Minimum entered currency you can set, as PLN is currently in this particular case because I was dealing with Pepco Poland, and Poland has got PLN as currency. And this is done at the enterprise level because Poland is going to be transferring most of the goods actually to various sub legal entities like Italy and Portugal and Lithuania. So for that reason, actually, we are setting up the default currency as entered currency, minimum entered currency is PLN. Conversion rate types, you can have rate types. So we have a rate type as National Bank of Poland. So I can select that one. Allow a receiver or reject transaction, yes or no. And this is the important thing actually, intercompany calendar. You can have intercompany calendar or as a GL calendar, you can pick that up actually, or you can create your own calendar, which is going to be intercompany calendar. So I'm going to leave intercompany calendar as it is because it's a GL calendar which is from October to September. Yeah, but your intercompany calendar can differ. The reason behind is your operation team or your finance team might require intercompany transaction to be done actually in a specific period. So if that's the case, then you can define your own calendar and then you can assign it over here. Let's say like I don't want to keep creating the transactions, and at the same time like you can open those transactions, those periods basically. Uh, you can open those periods to make it to push the transactions, intercompany transactions from your legacy applications as well actually. So moment you close your period, you won't be able to push any intercompany transactions. And the difference between this calendar, I'll come to that session, that description actually later on actually in my session. So let's move on. So once we have set this intercompany calendar, you can put the transaction type as a default one. And once you have saved, this is saved at the enterprise level. The next step, the configuration step is going to be transaction type. Okay, let's move to transaction type here. Right. If you see from the transaction type, I've just created a few of them. All it does is basically it manages the processing of intercompany transactions. The attributes set against the transaction type will determine how to process the intercompany transactions. For example, if you see this one, I've created one transaction type. Now, this doesn't require a GL, so subledger invoice to be created, right? Whereas this requires, if I'm selecting this transaction type, it requires the subledger to be created. That means it will create a receivable invoice, it will create a payable invoice, and then it will push into the journals. Whereas in this particular case, it can directly used as a journal process. Now the second point is like whether his approval is required or not actually. So when you are creating the intercompany transaction, it will go through the approval process. It will go through the BPM process flow. And once it is approved, then only it will start creating the receivable invoice and the purchase and payable invoice. You can set your default configuration, so default exchange rate type as well. You must be, like when we went to manage system options, you do have that option, but that can be overridden at this level as well. So if you are setting up at the system option level, and if you are setting up over here, this will override your conversion rate type. Okay. So these are the transaction types. Now this is going to play a vital role when we come to period types. Okay. The fourth step is the period types, intercompany period types. And if you we have created intercompany system options, right? And we have configured or set the calendar which we are going to be using it. Now the difference between intercompany calendar and GL calendar or a subledger calendar is it works only with one principle, like open or closed. So if the period is open, the transaction can flood in. If the period is closed, you cannot push any transaction in that particular period. However, for intercompany, it can be opened against a transaction type. So I can open a transaction type for the month of Jan 2025, let's say, and for transaction type IG miscellaneous, it's going to be open. For other transaction type, I'm going to make it I'm going to keep it closed so that accidentally the subledger or accidentally the legacy application is not pushing any intercompany transactions into that particular period. And this is how it can be controlled at the granular level. So let's check this one. You can see this one, it is showing me like 020, 012025. I see miscellaneous, and it is open right now. Okay, so it is, so each period is mapped against the transaction type. So if you see this one, management fee is not opened actually for management fee. So that period is not open for management fee. That means any transaction in that period for this transaction type won't be pushed into the intercompany module. Okay. And how do we open this period? I'll quickly show it to you. Okay, so these are the transaction type. It's showing me because I'm in 012025. So it's showing me, okay, these are the transaction types which are yet to open. Like you can see, like IC miscellaneous is open, but the rest of them are not open. So you can just click on this one, press the open button, and it will be open. And we'll go to that particular screen to see whether it has been opened or not. IC Corp guarantee. Okay, so this is my transaction type, and I'll go there. I'll quickly check my it was different actually, Corp guarantee, and I'm going to say this is open now. So now if your legacy application wants to push any transaction against this transaction type in this period, they'll be able to do so. The next step is going to be to create manage intercompany organizations. The task which we are going to be doing right now is to allow you to define intercompany organizations and assign them to a legal entity. This organization can function either as a provider or a receiver in intercompany transaction. Okay, so let's go to manage intercompany organizations. You have to come to the setup and maintenance, query your legal entity. So we have already created legal entity. Sorry, like we've created some of the intercompany organization. So I'm just going to query with legal entity. Okay, so this is my organization name, but this is nothing but it's my intercompany organization name, which is going to be, you can call it as PEP Poland or anything, PLT, PPL Poland, anything like that basically. Because when you are giving the data access to the intercompany organization, this needs to be referred by this name and not legal entity name. So you're just creating this organization and then assigning it to the legal entity. You can also define, you can also optionally, because this is also optional basically, like you can put your receivable business unit and the payable business unit. Now, if you have a receivable business unit and the payable business unit within the same legal entity, the two different business unit, then you have to maintain that. If it is same, then it will be picked up by, it automatically picks up the first one. You can optionally, you can also assign your balancing segment for the intercompany. This is not required actually, but I've just kept it actually for the demonstration purpose. Okay, so this is intercompany organization. I'll query another one actually for your understanding. Italy is going to be our. Okay, so you can see like I haven't put any balancing segment over here. Okay, it has got receivable business unit and the payable business unit, both are same, and this is mapped to the legal entity. Once you have done it, actually you have to assign or you have to provide the data access to this particular organization. Without this, you won't be able to select any business unit at the time of making the transaction. Our next step is to associate a supplier and a customer to the inventory org, because when you are creating invoice, you do need required for receivable side you require customer, whereas on the payable side you do require supplier. So you have to create a dummy supplier and a dummy customer and it will allow you to select only the internal type. The type should be internal. You have to just make sure whenever you're creating this kind of a customer or a supplier, the type should be set to internal. Okay, so let's go to manage intercompany customer and supplier association. For the sake of demo, like I won't be creating a customer or a supplier. I've already created a supplier and a customer. I need to just associate that. Okay, so this is my Pepco Poland. Oh, okay. Okay, so I'm just querying this one. And if you see like intercompany organization, it says all, and the legal entity is mapped to this customer name, which is like Pepco Poland SPZ, and the customer number is 3. And my supplier name is Pepco Poland SP Zoo. So I've created with the same name basically to avoid any confusion. And the supplier number is 300,006 basically. All you have to just make sure whenever you're creating this kind of a supplier or a customer, you have to set this internal type. I'll quickly show you what I mean. This is why, sorry, I was searching the supplier. Let's search the customer basically. Yeah, this is the one actually I was referring to, internal type. It should be internal type, account type. Okay. We have completed this step. We'll jump to this step now, receivable assignments. So this particular task is mainly used for the receivable transaction. So when you're creating the AR invoice, it does require your transaction type. It does require receivable transaction type, and it does require memo line. So you can assign this um, all these attributes basically against the business unit. So what will happen is like whenever you're creating the transaction, like in that particular business unit, it picks up the transaction type, which is nothing but an intercompany transaction type. And for that intercompany transaction type, it requires what which receivables transaction type and a memo line. So you can assign this actually at this point. So it's just a configuration, it's just a mapping basically, because most of the code combination can be derived from transaction type itself. So for that reason, actually, Oracle has provided you in combination with business unit and transaction type, intercompany transaction type, you can assign your receivable transaction type as well. So this is the screen where you can uh, do this task. Recap now. What we have done is we have configured system options at the enterprise level. Then we created transaction types, which is going to be segregating your transactions, and you can open the period against that particular transaction type. So we have created period types as well. Then we have created inventory organizations, intercompany organizations, which is going to be mapping to your legal entity basically. And then we have created customers and supplier and then associated that customer and supplier to intercompany organization. And also like we have done a default setting for the receivable transactions. So we came to manage intercompany receivable assignments where against the business unit and for a specific intercompany transaction type, you can assign a default memo line or receivable transaction type so that you can derive your code combinations automatically. I won't be performing step 8 now. Instead, I'll be jumping to step 9 to create intercompany transaction. Step number 8 is required when you are trying to create journals between two different legal entities. Now, it kind of like an intercompany or intracompany basically. So when you're creating one line with PPL and one line with PIT, then how those journals are going to be tallied basically. So that configuration is going to be required when you are pushing it through the journals. So let's create intercompany transactions and I'll come to this task later on. Okay. So you have to come to intercompany workbench. Once you come to workbench, you'll find intercompany accounting, select transactions. Now on the pan panel, basically you can select create transaction. When you come to create transaction, between in order to create any intercompany transaction, one is a provider and second one is a receiver. So let's take an example in this particular case. So let's say like if Pepco Poland in this particular example, Pepco Poland is transferring their goods to Pepco Italy. So my provider is going to be Pepco Poland, whereas Italy is going to be receiver, and it becomes my payable. So my payable invoices are going to be created in Pepco Italy, whereas my receivable invoices are going to be created in Pepco Poland. Okay. Now this is very, very important actually. Like I wanted to tell you about this one. What happens is even if if you have created inventory org, so intercompany organizations, you have provided access to intercompany organizations to a job role called intercompany accountant. and even after running the synchronization process, role synchronization process actually. So now there is a bug actually. So what you need to do is you need to come out of the browser, clear all your cache, and then retry, and it will appear here. So we'll select the transaction type as IC management fees, and then conversion rate type, I'm going to select National Bank of Berlin, because this gets inherited from the system options, from the transaction type is illustrated. It comes from there actually. So control total you have to just enter. It's not mandatory, but because we are enabling the batch, and you can have many intercompany transactions in this particular case, so for that reason actually it maintains the batch, and it will also make sure you're not exceeding the control amount, or you're not exceeding or like entering the lower amount basically. Okay, so receiver, who is receiver here is Pepco Italy, right? 1000. And here I'm going to enter my distribution charge account, basically 76090. So this is my charge account, which comes from IC charges income management fee. Yep. So I'm going to enter in. Okay, so this is coming from. Okay, so you can see the amount difference. Otherwise, it won't let you go. Basically, you won't be able to submit the batch. Now, our batch number is 2034. You have to just make a note of this one actually, which will help us to query back. So it's giving me this error status, basically saying intercompany period using the is not open basically for 010, and this is not open for IC management fees. Oh, I've selected this one, IC miscellaneous. I need to select IC miscellaneous. Okay, otherwise I'll have to go back actually to that particular screen where I can open that period specific or task type specific intercompany periods. Okay. Okay, it has been submitted. Batch 2034 has been submitted. So this is nothing but it's an info tile. Basically, it will give you glance of all these intercompany transactions where you require attentions. Okay, on the left on this window you can see all those transactions, basically all this like task. One is like manage intercompany outbound transactions. So you can click on this one. Here you can click on 20. You can enter your batch number 2034, and you should be able to query basically your batch actually. So the batch has been submitted. It has been approved because I haven't put any conditions. If you want to put any conditions, you need to change your BPM workflow. There is a BPM workflow explicitly uh, for intercompany transactions. So you have to just quickly check that. I can show you just 1 minute. Okay, I was not due to some problem actually on the browser. I've gone to Chrome actually just to select actually that BPM workflow. If you come to administration, task configuration, you can directly go to that particular task as well. Actually, like there's a task called manage task configuration for financials, and you should be able to query it there as well. And you can see this one, this workflow. My workflow is very simple right now. I'm just trying to approve without putting any conditions. So it is intercompany transaction approval process, and you can see like I'm just selecting my provider organization name is Pepco Poland SPZ. It should approve, and this is my approval group, and I'm part of that approval group. So let's query approval group, and you can see I'm part of that approval group. Hence, it allows me to approve basically automatically. So, yep. Okay, coming back to our intercompany transactions. So this has been approved 2034. The next step is transfer to receivables and transfer to payables. So we'll just quickly transfer to receivables. Now receivables is Pepco Poland because provider is Pepco Poland. So I'm not putting the dates, and I'm going to transfer it to payables as well. Now this is going to be Italy because Italy is going to be making a payment to me. Again, I'm not putting any dates, and I'll see, okay, once it is created. Okay, so we can just come back to the receivables first. We'll check the billing, and I'll quickly check my transactions as well, actually. So this is the one actually which I've created just now, and you can see the transaction type which I was explaining about receivable assignments screen, actually, where you can assign receivable transaction type against the intercompany transaction type. And memo line is going to be required to get the information. You can see the memo line, it picks up this memo line, and memo line has got the distribution code as well, actually. Okay, so this is my receivable invoice, and the normal process for, like, because it is in a complete state, you can do the accounting, you can post to the ledger. Coming back to payables, let's go to payables now. Okay. Okay, so the payable, it should be the same number basically. So you can see the invoice number. Whatever invoice number was created for the receivable, the same invoice number is going to be created for the payables as well. This is how the link, this is how the bridge between the intercompany AR invoice and AP invoice is established. Yeah, so the invoice number should always be the same. So we'll quickly check what was the invoice number on the receivable side. Yeah, it is ending with 4. So it should end with 4. Let's go to payables. I think I haven't transferred properly, or I might have to see why it's not intercompany transactions. Let's transfer it one more time. And I'll check. So it has been completed successfully. Let's check the report. Yep, so it has been created. You can see the invoice number. It should be exactly the same as the receivable invoice number. Let's go to payables, invoices. You can see this invoice has been created. So receivable, so when you are creating intercompany transactions, receivable invoice will always be created first. Actually, once it is created successfully, then only it will go for the second leg creation, which is the payable invoice. Okay, so this is my invoice which was created. This is distribution code which has been picked up. Okay, right, so we have completed creating the intercompany transaction. I've shown you receivable invoice. I've shown you payable invoice as well, actually, and the normal process like pushing to the journals and accounting and all that. Basically, that's normal process. Okay, now we'll move to this step. Perform. We need to understanding intercompany balancing rules. Before we move to step number 8, I would like to explain you how this code combination or distribution code was derived actually. Now, for even for the intercompany, very similar to like payables, even for the intercompany, Oracle has provided you transaction account definitions. So let's quickly check how those account code combinations for the providers and the receivers are getting derived. Okay, so let me transaction account. Yep, so you can click on this one. So this was created actually, it's a custom basically which we have created. If you click on account definition, it will provide you two different accounts. One is intercompany provider distribution account, and one is a receiver distribution account. Now you can see on the right hand side, this is for the complete combination rule, like PEPCO provider distribution and PEPCO receiver distribution. But at the same time, you can replace by putting change the value replace by changing the value at the segment level as well, actually. So we have what we have done is, this is my code combination for all the segments, and the override is going to be happening actually on the segment side. Then take an example of entity. Now if I'm going to put my account code combination as a static value, then I need to override my entity, because there could be a transaction between legal entity A and legal entity B, and for those legal entity my primary segment value could be different. So I'll quickly show you this mapping set. You can click on account rule first, Now you can see like there are accounting rule actually which we have created. So there's account rule which is for at the segment level, which is for the LE, legal entity. Now if you see there's a segment and I'm going to be overriding at the entity level, and the mapping set which is going to be used is TEPCO provider LE. So let's quickly check mapping set now. Okay, so you can see like intercompany provider organization, this is my source, this is my chart of accounts, and this is how exactly you can put the input value. So if my input value, though it is a very tedious process actually, like you have to put the name of that legal entity. So tomorrow you're changing the legal entity name, or you're going to be adding a new legal entity, you have to come to this mapping set and associate a code against that. Yeah, so this is my input value and this is my output value. So this is how exactly the code combination is derived. So when you look at the transaction which we have created, yeah, intercompany transaction. This is the one actually which we created. So this code combination comes from this. This is a distribution code, but there is a code combination which comes from there. Okay. Now let's move on to step number 8. Right. So step number 8, what it means basically. So whenever you create a journal and you're creating two different lines with two different balancing segments. Now it could be those two lines are pertaining to two different legal entity, but provided if they belong to the same ledger. Now, if you are going to have a different ledger, then that is going to be a completely different ball game altogether. So, if there are two different ledger, then so take an example. If my legal entity A and legal entity B both have got two different ledger, then you cannot create um, intercompany journals. Basically you can create, but that is going to be through a different method called allocation method basically, and that's called cross ledger allocation journals. Whereas if you got one ledger and there are two different legal entities, take an example. I've got one ledger, I've got single legal entity but two different primary segment, or you can have two different legal entity altogether. Take an example of this for an East. So even in this particular case, you can create intercompany journals because they belong to the same ledger. Moment you put into a different ledger called East ledger, let's say, you cannot create intercompany journals straight away. You need to go through the allocation process, and this is called cross ledger allocation process. So you have to create a rule, you have to create a rule set, you have to define the point of view within EPMS, and then you need to basically like create a cross ledger allocation generate a cross generate allocation process, and this is how exactly it will generate cross ledger journals. Now my scenario is very simple. I got one ledger, one legal entity, two different primary segments. So whenever I'm trying to create a ledger, trying to create a journal with one PPL and one PLE as entity, automatically it needs to, because those are my primary segment values, balancing segment values, so it needs to tally basically. So I cannot have debit amount to PPL and credit amount to PLE, it needs to, my trial balance should tally basically, because those are my balancing segments. Okay. So first of all, you need to, so what I've done, I'll just show you, I tried creating a journal. I tried creating a journal actually in a month of Jan 2025. So you can see I've created a journal. It went through an approval process. Now the approval process is very simple. Basically, it goes through BPM process, and since I've assigned myself as as an approver, it got approved. So if you see my lines, I've created. I'm trying to debit like 150, which is my PPL is going to be a receiving a provider basically, and PL is going to be receiver. Okay. So I'm not posting right now. Moment I've submitted, as soon as it got approved, it will give an error message saying the intercompany receivables account between PLE and entity has not been set properly. So you need to set this properly, basically. Okay. So if you come to this manage intercompany balancing rule, it has got like four different types of in in which you can create your balancing segment rules. The first one is primary segment rule. It's a very straightforward, and it goes in a chronological order basically. So it will check whether the rule has been defined for primary segments. If it is not defined for primary segment, then it will come back to like legal entity rules. If not, it will come to ledger rule, and this is going to be a lowest granularity basically. It will come to the chart of account rules. If you haven't defined, but you need to define somewhere. So let's create one rule. Now this is applicable for journal source. Any journal source, you can specify rule for a specific, because your receivable accounts and the payable account might be different based on your journal source and the category, or you can have a generic one. So it will always look for the specific one, and then it will go for the next one actually. So if you have defined a rule for a specific journal source and a category, and the second rule says other and other, like all source and all category, it will always go for the specific first, and then the second one is going to be, the last one is going to be all basically. Yeah, I'm making it very simple. I'm just putting it as other. I'm not putting the transaction type. This is nothing but it's intercompany transaction type. I need to, because see, I'm trying to put the primary segment balancing rule for the ledger. I need to put the ledger. So let me put this ledger. The ledger is going to be same for me because they belong to the same ledger. I'm not putting any legal entity. I'm putting this one primary segment and two primary segment. Okay, I'm just going to copy this one, receivable amount account, and this is going to be, I'm putting my data as 21st of 25. Press a save button. So you can see like we have created a rule. It's from primary segment value to segment value. Receivable account is this 200100, and payable account is 240,900. Okay, we have saved this, and now let's go back to our journal. This will take time actually because it requires approval. So it goes through the BPM process. Journal was approved, but then it went into an error because it's not able to generate the second leg basically to complete the intercompany transactions. Now the reason actually, like if you see show errors, the reason behind is the intercompany receivable account. The account which was selected for receivables and payable account is a control account. So you cannot create your journals on the control account. So hence this is an error basically. So you need to go back to your balancing rule just to ensure like you're not creating on a control account. So let's go back actually. Now I've just created one balancing rule basically for source other, like all sources, but specific category like adjustment. But now the one which we have created is a different category. So we'll have to create for other and addition. I think I've selected addition. Chart of account, we are just going to be selecting as it is. Now this chart of account is going to be common for any ledger, any legal entity. So so this can be used basically. So even if I'm going to be using for Italy, because Italy also is based on the same chart of account, it will pick it up this receivable account and the payable account. Okay. Yeah, we have to just capture PPL. Yeah, you're not going to, entity doesn't matter over here. All anything matter is the receivable account and the payable account. So I think we have created receivable account. So just copy over here is to yeah, this is the one actually. Okay, and we are not giving any primary segment over here because it will just pick it up this natural account and then it will do the rest basically, and it happens actually on the journals. I'm going to okay, I'm going to put the date as right. So now let's go back to our journal. I'll try to do the edit. Okay, I'm just pressing the post button. Again, it needs to when you're setting it to edit, it will send this for an approval process basically. So once it is approved, and in this particular case, I've changed my BPM process so that it comes to me for an approval process. So it's going to be easier. So I can just go go to another screen basically, which is this one. Can navigate to this screen, manage approvals, and I can see like, okay, this is going to be coming. Okay, now coming back to manage journals. Still processing. Now, if you can just open this one, if you'll find it has created other legs basically. So these are the two lines which we created, but then it picks up from the balancing rule. So it will say PPL is my entity and intercompany is PLE, and this is my receivable account 240900. Payable account is a payable account, and 20010 is a receivable account. Okay, so it has picked up actually receivable account and the payable account both. Okay, so this has been posted successfully. And in some cases, actually, if you haven't defined the sequence against that particular source or a category, you need to define the source against those source and category so that gets posted. Okay, so I'll quickly show you. You can define your intercompany balancing rule at primary segment rules level. You can define at the legal entity level. You can define at the ledger level, or at the last granularity, you can define at the chart of account level as well, actually. Okay. This concludes our intercompany process. Hope you liked my session. And if you haven't subscribed to my channel, please do subscribe to my channel. Thank you.